Hey everyone, welcome back to Corporate Dakota, the place where we unpack the hidden stories within corporate filings to see if the Emperor is wearing any clothes. And boy, do we have a tale today packed with more twists and turns than a pirate's treasure map. Alright, let's dive straight into Seadrill Ltd's latest annual report. If you love numbers and want to see how a giant offshore drilling company is really doing, you are in the right place. We're going to cut through the jargon and get to what really matters. And remember, if you like deciphering these financial documents with us, make sure you are subscribed and join our Discord community, linked in the description below. It is where our community really connects. First up, let's talk about the money coming in for the year ending the 31st of December 2025. Seadrill brought in $1,437 million. That sounds like a lot, right? But what is really interesting is how that compares to last year. In 2024, they made $1,385 million. So revenue went up by $52 million, a modest 4% increase. Not exactly a roaring success, but hey, it is not a step backward either. Digging a bit deeper, most of that money, $1,089 million, came from their core business contract revenues. That is up 8% from last year, which is good news. It means their main gig, drilling for oil and gas companies, is bringing in more cash. They also picked up $254 million from management contracts, a slight 3% bump. That is steady work helping out affiliates. However, leasing revenues took a big hit, dropping 39% to just $33 million. This is likely due to selling off some of their older assets, which makes sense from a business strategy point of view, but it does mean less income from that specific area. Now, where is all this money coming from geographically? Brazil is becoming a powerhouse for them, raking in $611 million in revenue in 2025, a huge jump from $343 million in 2024. That is almost double. This is clearly a key growth area. The United States is steady, bringing in $368 million, almost the same as last year. Norway, on the other hand, saw a significant drop with revenues falling from $188 million to $97 million. That is a 48% drop, suggesting a slowdown in that region. And who are their big clients? Petrobras is a massive part of their business, bringing in 36% of their revenue in 2025. That is up from 18% in 2024. This is a huge concentration of business with one company, which can be good for steady work, but also risky if Petrobras decides to cut back. Seadrill is their next biggest customer, making up 22% of their revenue, which is stable year over year. Talos also increased its business with Seadrill, jumping from 2% in 2024 to 11% in 2025. Now, what about the costs? Total operating expenses jumped by 12% to $1,369 million. That is a bigger increase than their revenue growth, which is a red flag. The biggest chunk here is vessel and rig operating expenses, which went up by 8% to $736 million. Seems like running these massive rigs is costing more. But the real kicker here is depreciation and amortization. It shot up by a massive 42% to $238 million. This usually means they've either invested heavily in new assets or previous assets are aging and being written down faster. Looking at the capital projects they've undertaken, it seems like a mix of both. And then there are the write-offs. They recorded a $22 million loss on impairment of long-lived assets, specifically for the West Eclipse rig. This means they've decided that rig is worth a lot less than they thought, likely because it is not expected to be used much in the future. That is a clear sign of operational shifts or tough market conditions for certain assets. On the flip side, they had a big gain on disposals in 2024, raking in $234 million from selling off old jack-up rigs. In 2025, that gain shrunk to just $1 million, meaning the big asset sales are behind them for now. All these changes in costs and revenues led to a significant drop in operating profit. It fell from $412 million in 2024 to just $47 million in 2025. That is an 89% plunge. Ouch. And when you factor in interest expenses and taxes, the picture gets even clearer. In 2025, Seadrill reported a net loss of $77 million, a massive swing from a profit of $446 million in 2024. That is a 117% decrease, meaning they went from making good money to losing money. This translates directly to earnings per S-hair. They went from $6.56 per S-hair profit in 2024 to a loss of $1.24 per S-hair in 2025. This is a big deal for investors. Let's look at cash flow briefly. Operating activities actually used $28 million in cash in 2025, compared to providing $88 million in 2024. This decline reflects the lower profits and higher costs. Investing activities show they spent $113 million in 2025, mainly on capital expenditures for upgrades and spare parts for their rigs. In contrast, 2024 saw a huge cash inflow of $226 million from selling off those old rigs we mentioned earlier. Now, this report also details a massive amount of risks. The overarching risk is their dependence on the oil and gas industry. If oil prices drop or demand falls, it hits them hard. This is a cycle they're in, and right now the report flags continued volatility. And then there is the debt. They admit they have a significant amount of debt, standing at $613 million at the end of 2025. While they say they're compliant with their loan covenants, this level of debt can limit their flexibility and make them vulnerable if things take a turn for the worse. They also talk about their contract backlog, which represents future revenue from signed contracts. It stands at $2.38 billion for 2025, down from $3.18 billion in 2024. While still substantial, a decrease in backlog means less guaranteed future income, which is always a concern. Operating globally brings a host of political and regulatory risks, from sanctions to unrest in certain regions. This adds another layer of complexity and potential disruption. And of course, environmental regulations are a huge factor. Stricter rules on emissions and climate change could mean significant costs for upgrades or changes in operations. In my opinion, Seadrill's strategy seems to be focused on modernizing its fleet and navigating a challenging market. The big revenue from Brazil and Petrobras is a huge driver, but the concentration there is a double-edged sword. The drop in overall profit and the shift to a net loss in 2025, coupled with increasing operating expenses, highlight the pressures they are facing. The substantial debt load, while currently managed, remains a key risk. Their future hinges on successfully securing more contracts for their operating rigs, effectively managing costs, and navigating the volatile global energy market and increasingly stringent environmental regulations. The write-down of an asset and the decrease in contract backlog are warning signs that demand might not be as robust as hoped in certain areas. So what is the story here? Seadrill is fighting hard in a tough industry. They've got some strong regional growth and key client relationships, but rising costs, a big debt burden, and a dip into the red financially suggests they're walking a tightrope. The market is clearly shifting, and how they adapt will determine their success. That is our deep dive into Seadrill's latest financial report. What do you think about their performance and the risks they're facing? Let us know in the comments below. If you found this breakdown valuable, please hit that like button, subscribe for more corporate insights, and don't forget to join our Discord community linked in the description for more discussions. Thanks for watching, and we'll see you in the next video.